Okay, check the answer to homework question. Question number 9. 3 questions for homework in chapter 6, question 9, 12 and 13. So read question 9. For the assessment year 24-25, the gross total income of Mr. Chaturvedi, a resident in India, was 8,18,240. They have already given the gross total income to us, and this includes long-term capital gains of 2,45,000. Okay. And wait, what do you mean by this long-term capital gains taxable under section 112? Yes, if it is 112, it is a normal long-term capital gains. But if they write 112A, then it is long-term capital gains on equity shares. See, there are 2 sections for long-term gain. 112 is for general long-term gains, and 112A is for equity shares. Here, have they written A? No. So this is a general long-term capital gains. Maybe you sold some land, jewelry, gold, silver, but not shares. If it is shares, the section would be 112 capital A. Then there is short-term capital gains also. Okay. Here also they have not said it is 111A. If it is 111A, then it is equity shares short-term. But have they specified 111A? No. So it is a general short-term capital gain. Maybe you sold some land, gold, jewelry, etc. Anything. But it is not equity shares. So in short, can you tell me the breakup of, wait, one more thing is given. Gross total income also includes interest income of 12,000 from savings bank deposit with bank and interest on fixed deposit with bank. In short, see, in this whole paragraph, they have given the breakup of gross total income. So tell me, in the total income, what we have? One is long-term capital gains. Okay, then short-term capital gains. Then interest income from savings bank deposit and interest on fixed deposit with bank. Okay, this will help us in arranging the 5 heads of income. Okay, now, because here there is savings bank account interest, you will get deduction under section 80 TTA. 80 TTA. See, when do you get 80 TTB? If he is a senior citizen. So this is not, wait. Yes, he is a senior citizen. Wait, I didn't read the last line of the sum. In the last line they have given he is a senior citizen because of the age 70 years. Plus they also mentioned that he is a resident. So resident plus 70 years, that means he is a senior citizen, and being a senior citizen you will get 80 TTB, and in 80 TTB any account, whether savings account, fixed deposit account, any account with bank or post office, you will get deduction for the interest income. But first you have to include in income from other source, then you will get deduction under chapter 6A, maximum 50,000. Here it is how much? Here it is 52,000, but you will take maximum 50,000. Okay. Then Mr. Chaturvedi has invested in PPF 1,20,000. So investment in PPF 80C, and also paid medical insurance premium of 51,000. This will come in 80D. But this is whose mediclaim? Nothing is given, means for himself. So it will come in own, spouse and dependent children. Okay. And there you take additional deduction 25. If senior, and here he is senior. So you will take additional deduction 25, and balance you can take in basic. But balance is 26, but you have to take 25 only. So 50,000 will be 80D. Then Chaturvedi also contributed 50,000 to public charitable trust eligible for deduction under 80G by way of account paycheck. This will come in 80G L 50%. You know in FO Chamat, it was C, charitable donation, it is eligible for 50%, limited and 50%. But 80G you have to always take at the end. Okay. So now check the solution. In the 5 heads of income, first income from salary not there. Okay. Then income from house property not there. Income from business not there. In capital gains you can show short term capital gains 58,000, long term capital gains 2 lakh 45,000. Okay. And then income from other sources you can show 12,000 savings account interest, 40,000 fixed deposit bank interest, and still there is some balance. You can write other income. Because see, we have gross total income of 8 lakhs 18,240, but out of which we have details of 2 lakh 45, 58, 12,000, 40,000. So if you remove these amounts, still there is some balance. So you can show it as other income. You can just show it as other income. And your total should be gross total income 8 lakhs 18,240. Then let's deduction under chapter 6A. In that first you will take that C, triple C, CCD 1. So in that we have only 80C, PPF. That is only one item. So 1,20,000 fully allowed. It is allowed up to 1,50,000. So here it is only 1,20,000 fully allowed. Then you have 80D. That is 50,000 mediclaim insurance. Okay. Then what else you have? 80 TTB. And that is how much? 50,000. Actually we had 52,000. But maximum you can take 50,000. Okay. And your wording should be interest on any account with bank. And total will be 50,000 in the outer column. 80 TTB. Then that's it. Now 80G is left. And when only 80G is left, you should find out the balance at that stage. So I repeat, gross total income was 818,240 minus 80C 1,20,000 minus 80D 50,000 minus 80 TTB 50,000. So minus all this, how much you get? 59,240. This becomes your adjusted gross total income. Adjusted gross total income. Okay. Then you will write 80G. In that we have got limited category, but for that you should always prepare a working note. Always prepare a working note for 80G limited category. And in the working note our format is FOCHMT. You will prepare the list of that. So in that FO nil, in CHMT there is C, charitable donation 50,000. And right now don't take 50%. Right now you take full amount. 50,000. Then HMT not there. So total of all donations in FOCHMT is 50,000. Compare with 10% of what? Yes, I told you like this. Say 10% of AGTI minus 3 things. You know, to calculate 10%, you have to minus 3 things from AGTI, then you calculate 10%. So tell me which was the 3 things which you minus in AGTI? Short-term capital gains under section 111A. But they should mention 111A. Here short-term capital gains was given. But was it 111A? It was not given. Or at least they should have given equity shares. Either they should write equity shares short term or they should write 111A, but since that is not given, so the given short term gain is other short term gain, which we don't minus in AGTI. In AGTI, which 3 items you minus? Short term under 111A, which is not there in the question. Then long term under 112A, even that is not there in the question. Then other long term capital gains, yes. That we have 2,45,000. So out of the 3 things which we always minus, we have only one thing, LTCG others. So tell me then 10% of what was the AGTI? 598 then minus I wanted to minus 3 things, but out of those 3 things I have only one thing, 2,45,000 long term capital gains others. So minus this and then minus this and then take 10%. Directly tell me the 10% amount. 35,000. 324. 35,324. 35,324 is the limit. 10% according to that. Okay. Now actual donation 50,000 and 10% limit comes to 35,000 whatever. Then out of the two, which is less? So 35,324. And then you have to split in two parts. First priority you should give to family planning Olympic. But that is not there. So everything goes in balance. But of that you have to take 50%. So 50% of that is how much? 17,662. So this is ATG limited category amount. ATG limited category amount. 17,662. Then after deducting this, what is the net taxable income? 5 lakhs. Wait, 5 lakhs. 5,7. So this is the final answer. 5,80,578 for question number 9. Then question 12. Mr. Kaviraj, 63 years old, non-resident. He is a non-resident. Will you treat him as a senior citizen? No, we will not call him as a senior citizen, because senior citizen means 60 years and above plus resident. But here he is not a resident. So you will not call him as a senior citizen. He is a normal individual. Okay, then read. First point, income from business in India. Computed means it is already calculated. Good. Turnover is given. Turnover is not useful to us right now. So this will come in 5 heads, income from business. Then interest on recurring deposit with bank in Delhi. This will come in income from other sources. Okay, income from other source. Some students are saying 80 TTB. 80 TTB is for a senior citizen. He is not a senior citizen. Sometimes back only I told you. Because he is a non-resident, he will not get the tag of a senior citizen. Senior citizen means what? 60 years and above plus resident. Resident. And he is a resident or non-resident? Non-resident. He will not be regarded as a senior citizen. Let him be 100 years old. To be called as a senior citizen in India, your age plus residency status both are relevant. See, this is the way they try to trick you. Most of the students, what they will do, this interest income, they will take in 80 TTB. It will not come in 80 TTB. 80 TTB is for senior citizen. And I said he is not a senior citizen because he is a non-resident. Okay, then some students might think, sir, then we can take 80 TTA. 80 TTA is for savings account. 80 TTA, 80 TTA, please revise and come. Underline please. See, will this give rise to 80 TTA? TTA is for savings account. This is not savings account, this is recurring deposit. See, recurring deposit operates like a fixed deposit only. But you keep deposit on recurring basis. Savings account, they will write savings. You forgot within some days only. After 10-15 days, I will meet you somewhere on the road. You will find me also a stranger. That I have seen this guy somewhere. I think he was our sir, I think. 80 TTA is not applicable because it is not a savings account. And 80 TTB not applicable because he is not a senior citizen. So for this only one effect it will come in income from other source taxable, that's it. Okay. Correct. Correct. See, look at this. In chapter 6, I didn't I say it like this that in 5 sections you should be resident AT, U, DD, DDB, QQB, RRB. Plus one more thing I said, whenever you decide senior citizen, you should be resident. So in the whole chapter 6A, there are 6 areas where we check resident or not. 5 are the section ATU, DD, DDB, QQB, RRB, and this one means what? To decide senior citizen. Now wherever you decide, whether it is for the purpose of ATD, Mediclaim or ATDDB, there are also senior citizen 1 lakh, yes. DDB specified disease, or it is ATDDB. To decide senior citizen, you have to check he should be a resident. So finally this is income from others, so I hope this is clear. Then see next point. On 19th August 23, purchased a plot of land in Bhopal for 50 lakhs. Stamp duty value 60 lakhs. This is purchase of plot at low price. How do I know it is low price? The value of the land is 60 lakhs, but you have paid only 50 lakhs. So it is a purchase at low price. So this will attract the provisions of gift under section 56 to 10, income from other sources. And remember, immovable property, low price, what was the method of working? First see the benefit. So see here, benefit is what? Stamp duty value is 60 lakhs and actual price is 50 lakhs. So there is a benefit of 10 lakhs. Now this you have to compare with what? 10% of actual price of 50,000, whichever is higher. So 10% of actual price comes to 5 lakhs. So whichever is higher comes to what? 5 lakhs. Now compare this 10 lakhs with 5 lakhs. So 10 lakhs is smaller or greater? Greater. That means you are getting big benefit, fully taxable. This I taught you in detail in income from other sources. You want me to show that income from other source theory? The difference is more than 10% of 50,000, whichever is higher, so it will be fully taxable. So full 10 lakhs will be taxable. And your wordings will be purchase of plot at low price. And there you have to show the working also. In income from other source, we used to show that. See, in income from other source, if you remember, see, we used to show this working like this. Okay, then. So this was income from other source, point number 3. Then he is a director of an Indian company, Zumba Limited. During the year he attended 4 board meetings, for which he received 2,500 per meeting. Expenses for attending the meetings 2,000. See, this is fees received for attending board meetings. This comes in income from other sources. Now you will say, where did I teach in income from other source? In income from other source, didn't I say D, W, Ramu, Fakirji, etc. Etc. means it can be anything. Anything which is new to you, it will be income from other source taxable. And you can check if you want. This will not come in salary, house, property, business, capital gain. So it is income from other source taxable. But they have given expense also. And income from other source, when you find expense deduction under section 57. So first in the inner column you will write what? 4 meetings into 2500 per meeting. So 10,000 will come in the inner column. Then less deduction under section 57. How much? 2,000 you will minus. So outer column 8,000. Then spent 85,000 on the treatment of his son who is severely disabled. See, disabled means handicapped. Now see, for handicap, what is the rule? If you yourself are handicapped, then 80 you. But your assessee is handicapped or family member? Family member. So 80 DD. And in 80 DD you should check HDR. Handicap, dependent, relative. So handicap they are written, disabled. Dependent, not this, they are not given son is dependent or not. But we can assume he is dependent. This I have told earlier also, whenever they don't specify about dependent, independent, we can assume he is dependent. But he should be relative. And here relative means spouse, children, parents, brother, sister. So children. Son is children. So spouse, children, it falls in relative. So HDR, all three conditions are satisfied. He is handicapped also, dependent not given, we are assuming dependent, and son is a relative. But you will get deduction of max or flat. Here you get flat deduction. And how much flat? Welcome. You will get flat deduction how much? Severely disabled means 1,25,000. So everything is fulfilled. But this section is only for resident assessee. This section is only for resident assessee. And here at the beginning they are written he is not a resident. Anyways, I am just discussing to show the effect of all, that everything is properly satisfied, but just because of the fact that he is not a resident, he will not get the deduction. See, where all we see he should be resident, U, DD, DDB, QQB, RRB. So here it is DD section only, and it is not allowed to non-resident. So see, you can, if you want, you can write in the main statement, section 80 DD, treatment of handicap dependent relative, but amount column nil. In bracket, what you will write? Not allowed to non-residents. I repeat, see, your presentation should be like this. I repeat, 80 DD, treatment of handicap dependent relative, in bracket, not allowed to non-residents. Amount column nil. Then even royalty deduction same, not allowed to non-residents. See, royalty income, first you will include in income from other sources. In income you will have to include, but when it comes to deduction under 80 QQB, why did I say QQB? For books it is 80 QQB. You will not get 80 QQB. But in the statement, you know what you do? You write 80 QQB, royalty on books. In bracket again you can write not allowed to non-residents. In the amount column nil. But in the income you will include how much? 4 lakhs less deduction under section 57, 50,000. So outer column 3,50,000. Then Mediclaim insurance premium for himself. This is for himself. So himself Mediclaim, first you take additional deduction for senior citizen. Is he senior citizen? No. He is not a senior citizen, although his age is 63 years. But non-resident people are not treated as senior citizen. So in additional deduction, 0. Otherwise you take additional deduction 25,000 for senior. But here additional deduction 0. Because he is not a senior citizen. So you will take only basic deduction. But that is maximum 25. So here it is 60,000, but then limit is 25. So what to do? You will take only 25,000. So only 25,000. No, additional deduction is for senior citizen or not? And definition of senior citizen is what? 60 years and above plus resident. See, in 80D, overall assessee can be anyone. But for that senior citizen tag, resident is must. See, 80D is allowed. See, where we are saying 80D should not be given to him, we are giving basic deduction. Although he is a non-resident, we are still giving 80D. But in 80D, when we think of extra deduction of 25,000 for senior, that is not possible, because to get the tag of senior, you should be resident. See, those 5 sections which I made you remember, U, DD, DDB, QQB, RRB, that section is completely not allowed to NR. But in 80D, it is allowed to R and NR both. Resident, non-resident both. But in 80D, when you check senior citizen for that additional deduction, so there you have to check residential status. I am not saying for 80D you should be resident. 80D is for resident, non-resident both. But what is the format of 80D? Additional deduction, basic deduction, and in additional you take additional only for senior. And senior means what? Resident plus 60 years and above. So here I will not get that additional one. So although I have paid mediclaim insurance premium for himself who is 63 years old, but then he will not get the benefit of a senior citizen. So this will entirely go in basic. But in basic deduction, what is the limit? 25,000. So you take 25,000 only. Although we had 60,000, but we can take only 25,000. Yes, if he would have been a resident person, then we would have taken additional also, because senior citizen tag he will get. Then 25 in additional, 25 in basic. But here additional is cancelled because he will not get the benefit of a senior citizen. Yes, basic deduction you can get. See, these small things become clear only when you solve the questions. That is why my idea is, you know what, first you try the questions, then discussion becomes fruitful. Okay, now try the next point. On 1st to June 22, actually there was a printing mistake here. I forgot to tell you. This is not 22. This is 1st June 23. I forgot to make this correction. Anyways, already you have done some mistakes. One more correction. No. The intention of the question was, you know, during the year new employees were employed. See, I can still keep the date like this only. Solve. So tell me, what if the date is like this only? That means last year new employees were kept. Still we will get the deduction. Why? Because you get deduction for continuous 3 years. So even if I keep the date same, then it will be they were employed in 20 to 23. So that year they got deduction. Then second year again you will get. Third year again you get deduction for 3 consecutive years. But actually the question was 1st June 23. Now how do you want? Okay, let me keep it 1st June 22 only. Let me keep it 1st June 22. Let me keep it 1st June 22 only. So see, keep the date same. Because see, to you I can make the correction. But you know, this book is taken by so many people. Some students are not purchased my video lectures also. they will not be notified about the printing mistake. So I was thinking all that right now. Those who are attending my lecture, they are rectifying the mistake also, printing mistake. But those students who are not taken my lecture, they have simply purchased my notes. They will not be aware of the printing mistake. So let me keep it same. Technically it doesn't make any difference. And sum is right. Technically it is right sum. But my intention was to keep it 23. Anyways, forget it. Keep this 1st June 22 only. So tell me 1st June 22 you had employed how many employees? 10. And their salary was? That means it was less than equal to 25,000. Okay. And 5 new employees whose salary was 30,000. This is not eligible. Because to get deduction under 80 JJAA, the salary of the new employee should be less than or equal to 25,000. So this 5 employees will not be eligible. So this I will cancel. But this 10 employees will be eligible. So what will be the amount of deduction? 20,000 is salary per month. So multiply by full 12 months. See, in 23-24 they worked for full 12 months. Yes, in the last year they had worked only for 10 months. But in the last year, this is the second year. And even though it's the second year of the new employees, you get late deduction. You get deduction for continuous 3 years. Okay. So this year's full salary they enjoyed 20,000 per month, multiply by 12 months, and this way how many employees? So multiply by 10 employees. And then multiply by 30%. So I repeat, 20,000 into 12 months into 10 employees into 30%. That comes to how much? 7,20,000. And is he eligible for 80 JJAA? See here. See, the turnover was given. His turnover is 9 crores. And if you remember, I told you, those assessees whose sale is above 1 crore, they are called tax audit assessee. They have to get their accounts compulsorily audited. Audited means checked by a chartered accountant. And audit is compulsory for whom? People having turnover of above 1 crore. So see, for this was given. Indirectly they meant to say what? That he is a tax audit assessee. Turnover 9 crores means definitely it is more than 1 crore tax audit. And we can assume even last year it was. Anyways, right now we are taking deduction in the current year. So in the current year he is a tax audit assessee. So he will get the deduction. Then, so what was 80 JJAA? 7,20,000. Then donation of 20,000 to National Fund for Rural Development. Rural Development donation actually comes in 80 GGA, but it will not be allowed. For 80 GGA, what was the rule? Assessee should not have business income. Here he has income from business, and those having income from business will not get 80 GGA. So 80 GGA will not be allowed. Reason? Because he is having income from business. So in the statement you can write 80 GGA donation to National Fund for Rural Development. In bracket what you will write? Not allowed because assessee is carrying on business. I repeat, you can write like this: 80 GGA donation to National Fund for Rural Development. But in bracket what you can mention? Not allowed because assessee is carrying on business. Then next. Okay, wait. So total. Income from salary not there. Income from house property not there. Income from business given ready-made 45 lakhs. Capital gains not there. In income from other source, what we have? 1, 2, 3, 4 items are there in income from other sources. Check the statement for income from other sources. One is interest on recurring deposit 85,000. Second was purchase of land at low price 10 lakhs. Then directors board meeting fees 8,000 in the outer column. Then royalty income 3,50,000. So there are 4 incomes under income from other sources. What was the total of income from other source? 14 lakhs 43,000. 14 lakhs 43,000 income from other sources. 14 lakhs 43,000. Okay. Then gross total income 59 lakhs 59 lakhs 43,000 is the gross total income. Okay, then less deduction under chapter 6A. In that we have ATD 25,000. Then ATDD was not taken, ATQQB not taken because of non-resident. Then we will take ATJJAA 7,20,000. So one was ATD 25,000, ATJJAA 7,20,000. That's it. So what is the net taxable income? 51 lakhs 98,000. Then question 13. Compute the total income, Mr. Roy. Salary, this will go to income from salary as a basic salary. 4,80,000. Okay. Then what about employees' contribution to RPF? In income from salary we ignore it. But in ATC you will consider it as a part of lump enters. Lump PPP. Employees' contribution. Then employer's contribution to RPF. Wait, this question. Anyway, this solution I had, forget it. So employer's contribution to RPF inner column 48,000, less exempt up to 12% of basic plus DA in terms plus turnover commission. That comes to how much? 57,600. So our amount is within the limit. So fully exempt dash. Because when we say exempt up to 12%, means up to that much amount it will be exempt. And our actual amount was only 48,000. So it is fully exempt. Interest on RPF 9.5 cross multiply. So 22,000 is 11%. 9.5% how much? 19,000. Okay. And outer column how much you will get? 3,000. Then employees contribution to NPS. See, your own contribution will go in ATCCD 1B and CCD 1. Own contribution goes where? CCD 1B and 1. But first you will take CCD 1B, maximum 50,000. And balance you will take in CCD 1. So total is 1 lakh. Out of this 50,000 goes to ATCCD 1B. So what is the remaining? 50,000. This you can take in ATCCD 1. But how much you can take? See, for ATCCD 1 also there is a limit. Salaried employee 10% of basic plus DA in terms, non-salary 20% of GTI. So here is a salaried person. So 10% of basic plus DA in terms. DA in terms not there. Basic salary 4,80,000, 10% not at 48,000. So we have 50,000 remaining. But see what I am doing. Look at the screen. I will cancel this because there is a limit of 48,000 only. So in ATCCD 1B 50,000. and balance 50,000 will be restricted to 48,000, and that will come in the list of C triple C CCD1. In the list you will take. Then actually this I had discussed also once, this sum, this part. Employer's contribution to NPS first include in salary. How much? 60,000 entire amount. Then deduction under 80 CCD 2. If government employee, then 14% of basic plus DA in terms. But he is not a government employee, 10% of basic plus DA in terms. So that is how much? 48,000. Okay, then what about college fees? College fees means tuition fees. See, tuition fees, they will not literally write tuition. School fees, college fees, any education fees. See, even in college when you pay the fees, have you seen the receipt of college fees? They write tuition fees, then some library amount, blah blah blah, some breakup is given. But we will assume this is a tuition fees component only. See, whenever they will give school fees or college fees, you have to take it as a tuition fees. But tuition fees, where does it come? 80C. Maximum 2 children. You are only one child. So you will take full amount in 80C. Mediclaim insurance premium paid by employer. Did you notice paid by employer? Paid by employer means it is a perquisite. And this is an exempt perquisite. Fully exempt. You know, in income from salary, in the perquisite, in the chart of medical facility, at the bottom of the chart I had given, Mediclaim premium paid by employer is fully exempt. And this won't go in 80D. Because for 80D, premium should be paid by assessee. You yourself pay. Then you get 80D. But here you are not paying, your boss is paying. In fact, this is a benefit for you. But fully exempt, it was taught in perquisite if you remember. So exempt income from salary. Then next was spent 30,000 on treatment of his brother suffering from specific disease. Other one is disability. I am discussing both the points together. In one point he has spent on brother for disease, and in the other point he has spent on sister for disability. See, if you spend for disease, it is 80DDB. If you spend on disability, it is DD. So this second one will come in 80DD, and the first one is for disease, it will come in DDB. But you have to check HDR, BDR. What was HDR? Handicap dependent relative. And what was BDR? Bimar dependent relative. Bimar means suffering from disease. But they should be dependent relative. What about dependent? Not given. So we assume they are dependent. What about relative? Who is relative in 80DD, Spouse, children, parents, brother, sister. So brothers and sisters are relative. So they are covered in relative. But how much deduction you will take? For disease, there is a flat deduction or maximum? Maximum 40,000. If the patient is a senior citizen, then 1 lakh. But here patient is brother. Brother's age is not given, not a senior citizen. Maximum 40,000. But the actual amount is less, then take less only. So you will take 30,000. But for disability, it is not maximum, it is a flat deduction. Flat 75,000. Because they have not even given severe disability, so you will take 75,000 flat. Even though the amount spent is 30,000, flat 75,000. What about royalty? Royalty will first come in income from other sources. Okay, how much? 8 lakhs. Full 8 lakhs will come in income from other sources. See, bringing in India is a condition for deduction. But in income from other source, you will record the full income. See, that condition which I said that you should bring in India within 6 months, that was a condition for what? for availing the deduction. But in income, why will government put a condition? When you are showing in the income full, you have to show full income. So see, your actual royalty income is 8 lakhs. You will show full 8 lakhs in the 5 heads under income from other sources. Yes, when you take deduction, those tantrums will come. It should be brought in India, blah blah blah. Okay. But while you are showing in income from other source, show full amount of 8 lakhs. So entire 8 lakhs will come in income from other sources. Okay, then in 80QQB, what was our formula? Maximum 3 lakhs. Then royalty based on 15%. But here that is not given. So we'll assume it is based on 15% only. Means you can take 8 lakhs only, full. No, see, his doubt is what sir, these books, they have not specified it is literary, artistic, scientific. We can assume if the problem is see, while explaining also I told you in literary, artistic, scientific, no books are left. Literary is a general word, it includes novel, fiction, etc., everything. See, these are 3 categories, but in these 3 categories, in this 3 genre, all the books are covered. Don't think literary, artistic, scientific only, there are 3 types of books. These are 3 big categories. Most of the books which you see in the market will either fall in literary, artistic or scientific. So if the problem is silent about the type of the books, always make positive assumption that it is that literary, artistic and scientific books only. Always assume that it is that literary, artistic, scientific books, and 80QQB will be allowed. But see, what is the formula for 80QQB? 3 lakhs is a fixed amount and royalty based on 15%. So we'll assume that 8 lakhs amount is based on 15% only. We don't know how much percentage of sales is my royalty income. I am author. I want 8 lakhs. So we'll assume it is based on 15% of sales. If they would have said it was based on 19%, then I would have converted into 15% as we did in one question. But nothing is given. That means the given 8 lakhs figure is based on 15%. And the third amount is brought in India, 2 lakhs. See, these are the 3 amounts. You remember 80QQB, I will have to show you the formula. I think you have forgotten that formula. See this? 3 lakhs is a fixed amount and amount based on 15% of sales. So, given royalty, we will assume it is based on 15% of sales, that is 8 lakhs. Tell me, what if they would have said he received 8 lakhs which was 20% of sales? Then we have to cross multiply that based on 20% we got 8 lakhs. So based on 15% how much? Then we would have got some different figure only. But nothing is given, so assume the given figure is based on 15%. So this 3 lakhs we already have, and that 8 lakhs will become a second amount in the formula. And in third amount I want the amount which is brought in India. That is given as 2 lakhs. Then out of the 3, which is less? 3 lakhs, 8 lakhs, 2 lakhs. Whichever is less will be 2 lakhs. So I will take 2 lakhs in the deduction. So finally, in income from other source I will include 8 lakhs and in deduction I will get 2 lakhs. No, that 15% is not of 8 lakhs, dear. 15% of sales. See, while explaining royalty, didn't I say usually how do authors get royalty? Depending upon the amount of sales of his books. For example, I have written CA Final Direct Tax books. Now, whatever sale of books takes place, I will get certain percentage of that. So 15% is of sales. And someone said right now 15% of 8 lakhs. 8 lakhs is not the sales figure. 8 lakhs is the royalty figure only, which I am assuming it might be 15% of sales only. Do we know how many books are sold in India? In South Africa, sorry. His books are sold in South Africa. Do we know what is the amount of sales? So it is based on sales 15%. And 8 lakhs is not the sales figure. It is directly 15% calculated figure. Anyways, one more thing. See, if they don't mention anything about the percentage data, you can skip this figure also. But like in one question they had given, if you remember, one question we did in the class, they told you that he got royalty based on 18% of sales. So we converted that royalty of 18% into 15% by cross multiplication. But if they don't give anything about percentage of sales, you can in fact ignore this figure also. What difference it makes? My answer will be same. One amount is 3 lakhs. Other amount is foreign royalty brought in India, which is 2 lakhs. So whichever is less will be 2 lakhs. So 80 QQB 2 lakhs. So tell me then, what is the answer? See, I have the answer for this. Look. Income from salary. In income from salary, what we have? Basic salary 4,80,000. I am reading whole statement of salary. Employer's contribution nil. Interest 3,000. Interest on RPF. Then employer's contribution to NPS 60,000. Mediclaim insurance premium paid by employer dash fully exempt. These were the items in salary. I hope you have written these items. Total of all is gross salary, which is how much? 5 lakhs 43,000. Less standard deduction 50,000. So your salary answer comes to 4 lakhs 93,000. Then in income from other source, what you had? Only one thing, royalty income, which was 8 lakhs. So your gross total income is 12,93,000, correct? Then 80 CCD 1B 50,000. 80 CCD 2. What is 80 CCD 2? Employers contribution to NPS 48,000. Then C CCD 1. Here you have to make a list. In this list, what you have? You have employees contribution to RPF. You have employees contribution to NPS, that balance amount 48,000. Actually balance was 50, but we restricted to 48. Then we have tuition fees of son 35,000. That's it. These were the three items in C CCD 1. Total of that comes to 1,31,000. Maximum 1,50,000. So which is less? 1,31,000. Then 80 DDB 30,000. Treatment of specified disease for his brother. Then treatment of disability of his brother, sister, 75,000 flat deduction. That is 80 DD. Then 80 QQB 2 lakhs. Here even if you show the formula like this, it's okay. 3 lakhs or amount brought in India, which is less. See that 15% I narrated because I taught you. Otherwise in the question they had not given any data about what percent of sales is royalty was decided. So we can ignore that 15% point also. Just take 3 lakhs and brought in India, which is less. So that comes to 2 lakhs.
Sir, I have a doubt
Yeah.
Sir, for head of incomes, we have to prepare statement and give them note number.
Yes.
And for other workings, also we have to give note number.
Yes, wherever see, for example, ATQQB, you prepared a working note, give a note number for that. Yes. Note 1, note 2, whatever note 3.
But if I give note number 1 to income,
So what? Yes.
same note numbers.
No, not same note number. For salary, it was note 1. Income from other source, your note was not required because only one amount was there. Then for this, you can give note number 2.
And in that income from salary statement, other working notes are also there.
You can give any number. You write note Z. But you have to relate properly. See how to name the note, there is no rule for that. You write note number A, note number B, note number Q, anything. Yes. So finally all the questions of chapter 6 are done.